Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar just pare back from these lows just a little bit. You can see, obviously, the euro made a pretty good stretch. And actually, in the Asian session, we started seeing the euro pare back. If you look here on the 30-minute, actually had a little bit of a gravestone. Now, this is a real gravestone doji right here, although even the wick was a little bit thin up here, but we already stretched. I mean, obviously the 115 is key up here, but we saw the euro pare back a little bit. We're still holding up relatively steady here at these levels, and we'll take a look at the dollar. We finally got, as we mentioned yesterday, we needed a 2-hour close above 14.16. That would open the door for an upside challenge, and we certainly saw that. And if you see this here on the dollar CAD bout, wow, what a move lower here on the dollar CAD. We have come into key area right here, this 33.14. We're below it. Doesn't mean we won't get above it somewhere along the line. I mean, we're somewhat oversold. We've fallen like a rock if you think about it. And here, and there's just a little bit of support coming right there. I guess you could call it right in here. This 132.73, just a little extra line right there. And maybe that should go on and hold us here at this point. Let's go on and put that in place. And right there, coming in. Actually, it's right there. You can see all this volume coming in right there. It's 32.71. This has really fallen quite a bit. We've gotten past the 38%. We had the 38% confluence with the 33.14. I think the market may be just a bit overdone here. Probably look for this area to go on and hold in here. You can see a lot of volume that came in place here. We would have thought the 33.14 probably would have been a good area where you probably would have seen some decent short covering, but the market still pushed lower. And once again, we know how those Mondays are. I guess they want to, once they get going in one direction, really push harder. But I would look for the market to try and hold in here this 33.71. Then probably from there, we may be able to get some okay short covering from here. I mean, we've really pretty much fallen like a rock. Although we have Bank of Canada coming up too. We'll get to all that. There we go. Finally, we've seen gold going and pare back a little bit. Certainly looked like it wanted to make one more run up here. We're looking here in the daily. Made just one more run yesterday. Trying to come right back up here into this level, and we've kind of somewhat pulled back. We actually have pulled back a decent amount. The 1304 was still open. We couldn't make the most of that when the dollar was paring back. You can see here we made one more run attempt up here, and we talked about 1293 initially being at least starting the week off as resistance, but we said, hey, there's still the opportunity. We could even make it up to 1304. I thought we might even clip past 13 once we got this dollar paring back. Now the dollar, go into the dollar. Actually just got just below this key weekly support. We'll get to that to focus on this. We'd mentioned this. We actually already mentioned it, but we also mentioned in the chat room. Here's that 95.65 now. One of the guys has mentioned 95. I think they mentioned 95.30. And I said, yeah, 95.38 also is key, okay? And coming in right there. It's actually right in there. You see? Actually, right there. There you go, 95.38. I think we can get there, but you would expect a little bit of short covering against this 95.65. Thought they might even push below that and then try and come back, but it actually held again here, and you can see that was a smart bottom previously where the market had been able to really make a good move back up, so you would expect some short covering there. Got the euro dollar to go and ease back again. The Aussie dollar, we did go on and come back a little bit. We know that 71.46 was a 61%. We paired off down here at 71.16, trying to pop back up again. There we go. Get a good look over here on the 2-hour chart. And of course, cable. Still holding up very well. Very, very well. We know that it was important, and let's go into the daily. We start out the week on the analysis and explain how it had been important where the market was able to recapture 27.16. Certainly did not open the door for us to continue to move higher. Here's that key area right in here, this 27.78. We said if we could go and get a daily close above that, that's going to actually open the door for come much even higher. But we're still pushing up higher here in the cable, or a nice little upside push here. Take a look on the 2-hour. Just managing to hold just about this 27.56. Certainly constructive here. Now we do have Eurozone business sentiment, Eurozone sentiment at the top of the hour. Coming up at, we're going to be getting ready to get off, and that'll be coming up at 5 a.m. Eastern, 4 a.m. my local time. And let's take a look here in the States. We know that we're getting a lot of the data, or a good chunk, and it's not going to be available because of the government shutdown. But we do have Canadian trade balance, imports and exports at 8:30 Eastern. Whether or not, I don't even know whether we get the factory orders or not because of the shutdown. So, but that's what's scheduled, okay? And of course, API oil stocks at the after the close of equities. Once again, I guess you have to take this with a little bit of a grain of salt, whether or not we're going to have these available or not. So let's just go with a quick overview. Okay, and just look for the day ahead. It says looking at the day ahead from the European economics and politics. The main Brexit headline this morning is a Telegraph story suggesting UK officials have put out feelers on the possibility of extending Article 50 over concerns that a Brexit deal will not be in place by March 29th. While the sense from Brussels has always been that there would be readiness on the EU side to accommodate a slight delay, the last thing the UK government can do ahead of next week's Parliament vote is to acknowledge any such planning. Accordingly, the Brexit ministers gone on TV to deny it. Separately, the Assembly may vote today on an attempt by lawmakers to cut off funding to the government in the event of a no-deal Brexit. That amendment would not itself exclude the possibility of a no-deal outcome, but its backers hope it would make it less likely, preventing the government from executing damage inflation measures. There's yet more bad news for the German economy this morning as industrial output unexpectedly fell in November for the third consecutive month. Data from the Federal Statistics Office showed industrial output was down 1.9%, confounding a Reuters forecast for an increase of 0.3. That came after yesterday's worse than expected orders data. Economy Minister Peter Altmaier has come out strongly arguing that things aren't as bad as all that, promising this year will be seeing an upswing and that order books remain full. And just a quick overview here. After 2 weeks of wild swings, world markets appear to be looking as a glass half full again, even though huge question marks remain over the extent of the global shutdown. Let's jump in real quick. S&P futures were up again first thing Tuesday. 10-year U.S. Treasury yields have recovered to New Year's Eve levels. Asian stock markets were hesitant earlier despite constructive sounding from U.S. Commerce Secretary Ross in progress of this week's trade talks in Beijing. European stock futures pointing to a positive open here, even after the German industrial output numbers showing the third straight month of declines in November. Brent crude prices were firmer after a Wall Street Journal report that Saudi Arabia planned to cut exports to 7.1 billion barrels per day. By the end of the month, they were well off the week highs, close to the $59 set late on Monday. And we're looking at Swiss jobless rates, November retail sales, obviously the German industrial output, Eurozone business and consumer confidence. We just went over that, and that'll be it. Like I said, it's a limited type of economic data we will get with the shutdown, but we did mention about the Canadian data. That'll be up at 8:30 Eastern. And let's go and quickly hit the news, and then we'll get into the analysis. The Canadian dollar strengthened to a one-month high against its broadly weaker U.S. counterpart on Monday as oil prices climbed, and some investors bet the Bank of Canada will stick to this week as planned to raise interest rates to a neutral range. Bank of Canada, which has hiked 5 times since July 2017 to leave its benchmark rate at 1 3/4. Still, the central bank said as recently as last month that it will need to raise rates further to a neutral range between 2.5 to 3.5. I think there are people thinking that the bank will stick to its guns a little bit, at least in terms of eventually getting back to neutral, so it should be supportive of the currency, said Mark Chandler. Domestic data showed a surprise pickup in the pace of purchasing activity in December. The IV Purchasing Manager Index rose to 59.7 from 57.2, certainly adding to the strength of the Canadian dollar. Gains for the loonie came as the price of oil rebounded from 1.5-year lows reached on December on support from OPEC production cuts and steadying equity markets. And the Australian-New Zealand dollars pause awaiting proof of Sino-U.S. trade progress. The Australian-New Zealand dollars consolidated recent gains on Tuesday as investors waited anxiously to hear if any real progress was being made at the Sino-U.S. trade talks in Beijing. Commerce Secretary William Ross predicted on Monday that Beijing and Washington could reach a trade deal that we can live with as dozen officials resume talks. The talks are supposed to be between the mid-tier bureaucrats, so the appearance of one of China's most senior officials signaled China's eagerness to end the trade war, said Marshall Gittler. The Aussie dollar was taking a breather at 71.34 after running out of puff at 71.50. Now, we mentioned 71.46 is the 61%, and that was confluence with the level there on the two-hour chart at 71.42. This miss was largely because of imports of capital and consumer goods enjoyed a second month of surprising strength. Domestic demand was holding up, but trade tensions are occurring at a time when the growth outlook is softening in both economies. Noted CBA economist Belinda Allen. The outlook for China is crucial given 36% of Australia's exports go there. So like I said, we had a pretty good little run here in the Aussie. We are stretched. We'll have to go in and dip back lower and probably go pull back maybe about an extra 50, 75 pips at least. It's promising that the Chinese oil prices had just climbed to a 10-week peak on the talk of the restocking demand at steel mills, or is Australia's single biggest exporter to China. And we'll finish up quickly with the dollar and gold, and then we're on our way to the analysis. The dollar struggled for traction against its peers on Tuesday as investors increasingly convinced the Fed will not raise rates. The greenback was marginally firmer against the yen after falling 0.2 on Friday. Jerome Powell told the American Economic Association it's not on a preset path of raising rates. Powell's colleague, Raphael Bostic, the Atlantic Fed president, added to the central bank's dovish tone on Monday. Bostic, who is not a voting member of the FOMC this year, said the Fed may only need to raise rates once in 2019. The Fed is listening to the market and has acknowledged flashing market signs, said Sim Mong Siong, currency strategist at Bank of Singapore. U.S. inflation has been well behaved so far, and the Fed does not have room to pause on its rate cycle. And actually, we're saying it does have room to pause. The dollar index has lost about 2% since mid-December and has followed a decline in the U.S. bond yields. We've been talking about that for the last few weeks, and the doors opened, and we mentioned that yesterday how we were starting to turn from where we had been rallying the dollar index, and bulls have been lessening on those moves, and we made that one last move higher, which I believe was Wednesday of last week, and then that opened the door then for us to go on and start to roll back. And when I thought we were going to see that on Friday, we actually got that on Thursday, even after the strong ADP report. So that opened the door for us to move lower. We started stretching that yesterday, and we got that 2-hour close above 14.16 in the euro, and certainly they pushed that for what it's worth, although we've got it easing back a bit. The euro was down 0.2 at 14.48 after touching an intraday high of 14.85. The euro's recent strength has surprised some analysts as growth and inflation remain weak in the eurozone. Having considered a 200 pip range for the large part of the last 2 months, the pair is primed for a breakout, said Kathy Lean. The British pound changing hands at 27.87, relatively unchanged from her previous close. Theresa May must win a vote in Parliament to get her Brexit deal approved, or risk seeing Britain exit from the European Union and descend into chaos. May's chances of winning the vote look slim as the DUP, the small Northern Irish party that usually props up her government, is opposed to the deal. And lastly, we'll just finish up with gold. Gold falls on improved risk sentiment. I thought there was still a chance we might even get above 113, but like I said, when the dollar started moving lower, gold had its chance as we started moving higher. A nice recovery from Friday's pullback, but they couldn't fill the bill. And because of improved risk sentiment, gold is off of its highs, having to stay around current levels. The market has been having trouble by uncertainties around the trade war and interest rate hikes. However, now most of the stakeholders, including authorities in U.S., China, and Fed, are trying to cooperate and put up a positive tone for investors. A lot of people have gone long gold as they have bet the economic growth in China in the U.S. might slow down due to the trade war, said Kunal Shah. The dollar index was up 0.3, moving away from a 2.5 low hit on the previous session. Gold is trading lower as the dollar is showing early signs of shaking off its recent bout of Fed-induced weakness. However, the positive chatter around the U.S. trade tensions will temper expectations for the dollar. Gold prices have gained 11% since hitting a more than 1.5-year low in mid-August due to tumultuous stock markets. And let's go on and move in now to the buyers chart. I think we provide a pretty good little backdrop on things. So there's that 14.16 that we referenced about and how it was important for them to get above 14.16. That would open the door for us to challenge higher. And we certainly did get that move yesterday. We had the market going and pairing back. Well, those German numbers certainly don't help, and I guess right now we're kind of into a mini holding zone right now. This is a decent area on this pullback. Depending on how we start out in the U.S., we may find the market trying to pull back a little bit further, and if we do, we'll probably see some good demand short term coming in around this 14.28 for those bulls. Or let's call it 14.27 for those that may believe, hey, I think we're starting to see something here for us to move higher. Certainly the momentum has certainly gone and moved higher here. Then you can see here on the 30-minute exponential moving average, we're actually in a sell mode after breaking here. And that's what I'm saying. We may want to be able to push a little bit lower. If we look, let's go here. Right, coming in right there. Let's just call that 14.26. And I think that's a pretty decent area here. Look at that coming across. Probably for those that have gone bullishly inclined to try and step in and try and buy this. Let's go right there. Call it 14.26. It was important though. We were able to close above this 1469 on the daily. So that's very key here. Let's go here, 26. As things are starting to appear a little bit more cheerful for the euro. Well, upside, I think it's pretty clear where the upside is. It's right up here at this 115. And certainly will be a big deal if we can actually grab and succeed with the 2 hour close, a 2 hour close that is, above the 115. So and we'll now start to change this now to bullish, short-term basis. Only concern is we have lost a little bit of momentum on the 30-minute here. There's still a decent chance we can come down here. I think this will be a good area to step in right here, this 1426. If the market wants to start with the US session a little bit on the back foot, maybe a little bit of a turnaround Tuesday, and giving back a little bit, but I think any moves down here are going to be very well supportive. Well, this area is holding up very well here, and this right there at that 27.78. We talked about that when we were going over the analysis for the beginning of the week. It hasn't quite closed the deal on that, but that's what we need. If we can get this move up here to 27.78, that really pushes up here, right here to challenge. But things, I mean, we've come a long way. So, and then there's certainly the risks today and going forward here. Probably a little bit of an ease back probably would not be not unexpected. Let's take a look on the 2 hour to see what we're looking at here. I've had a pretty good little stretch right here, if you think about it. But the market is holding above this 27.56 for now. If we get a pair back here, if we lose this 27.56, it really does put a little bit of pressure on the market, and that support is going to come in right there. 27.20. You know, you look here on the 2 hour chart, and now this is a Greystone doji here. And look at this. It does feel somewhat stretched. Now, it's important that we're holding above this 27.56, but right here, that is a straight up Greystone doji. So we're going to put the resistance for right now in order for this to trigger. We'll actually just put it right there, 27.88. And that's actually where they ran out of gas up here, right there in this bar. You see that? Right to that close, 27.88. On a very short-term basis, we'll just say it's right here in the range. It has done very well on this recovery here. Got a Greystone doji here, and then look here on the 30-minute. Look at that. Certainly when they got this, certainly we're able to test, come down here and test, came actually right into this support level here, right there. You see that? Pretty nice little pop back, although it's trading in relatively tight ranges. Now let's go and move into the Aussie dollar. Well, after one heck of a recovery this last week at the flash crash, we've really tried to push this for all it's worth. But my fear is that we come just a little bit too far. We'll see what happens. As I mentioned before in the analysis, 71.42 is that level. Confluence was 71.46, which is a 61%. The talks between China and U.S. Certainly trying to put on a constructive face on this. We'll see what happens. Although they mentioned is that market's a little bit overstretched here. I think that the door is really open for us to go on and pare back a bit in here. We mentioned, well, actually, when we looked yesterday on the bias chart, I don't think anything has really changed there. 70.96, so we'll stay with 70.96 on a very short-term move, and 71.46 will remain here. We've come a long way, but I still, we've come a long way on a short-term basis. That we can move this to range or not. We actually have to climb the 71.46 for us now, I think, to start to say, maybe on a short-term, very short-term basis, we can say range. So I guess we'll switch it to range here for now. Obviously, on a little bit longer-term basis, not even that much longer-term, you have to say it's certainly very, very bearish. But on a short-term basis, the way we look at stuff, I guess we'd have to move that into a range now. After the strong recovery. You can see here on the short-term basis, we have moved in on the 30-minute exponential moving average. We have moved to the bearish. Now, we're just above that level, but we can certainly see that we're in a bearish mode now, in a sell mode here with the exponential moving average. Let's go and move into the Kiwi. Relatively quiet day, so we're just going to, after these, letting some of these moves, I guess, going and digest at this point. We had 67.06 and 67.64. And we got up as high as, 67.67. So for right now, we'll keep it. Actually moves just a hair up, just a bit up right there. 67.66. We had 67.64. That held it in check. We're actually going to move this a little, just a nudge lower, 67.02 for support. Well, this dollar CAD has really come down like nobody's business. What a move. And here, one of the things we're looking at was we talked about that being daily closing support. Once you got past that, daily closing support really opens the door for them to even push even lower. And certainly we saw that yesterday. Um, we came down here into this 33.14, and that was a pretty good, it's a pretty good area here. And especially how far we've fallen and how quickly you'd expect probably a pretty decent little bounce from there. We may even start to see that. Obviously, the Bank of Canada is what's keeping the pressure on this. So, but a pretty good volume area here between 33.14 and right here, 32.71. We'll mark that off. There we go. We're still trying to push it, but like I said, that Bank of Canada's got this market on the defensive quite a bit here. And boy, what a move we've seen here. Certainly, the recovery in crude oil has certainly had a good portion of that. But I think at this point, the thought that the Bank of Canada will go on and will provide a little bit of a bullish bent, at least from the market's perspective, is certainly keeping the pressure on the dollar CAD. That being said, if we do get a bit of a surprise here, you can see this thing quickly snap back. Right here, we're going to go right there with support here, 32.71. Resistance will come in at 33.63. 33.63. This dollar Swiss certainly is hugging the lows, and we got here down to this 98.02. That's our support with 98.52 at resistance. You can see it right here, just hugging these lows here. Additional support comes in right there at 97. Right there at 97.76. And it just not giving very much of a bounce whatsoever. So we're going to go with that on a very short-term basis. It's 97.76. And right there, 98. It is rather oversold here, and not thinking that we'll make that run, but this is where you'll start to find some additional selling come in here. Call that at 98.38. Let's take a look at this here on a daily. Almost working like a pivot at this point. Now let's go move into the dollar yen. Well, this is rather interesting. One of the things we spoke about at the beginning of the week was the importance when on the weekly. Move this to a weekly. Obviously, a very, very strong recovery, but when you look here on the daily, all about this 927. I think we called it 929, but 927. The only way that you're able to go on and act, can you imagine that? We even got below 109, great area there for those that stepped in. The only way to negate this bearish mode now, we need to get a daily close above 927. Let's go and take a look at it here. Got up as high as 908. Right here at 909, about 909. So resistance, it did make it up to 909. We're at 884 and came in right into this trend line. Same thing here. I think if you think about it, almost like with the Aussie, but probably more pronounced here, is they're just squeezing some shorts because I think things have really materially turned lower from and I say from a longer term perspective. It's clear we did go in and break down, but I think with the move that we saw, flash crash or not, I think that at least on a medium term basis, we'll eventually end up coming down here. Probably come down here about the 695 area here in time. They're holding them hostage up here. Short-term resistance, actually that key resistance. And you can see right there where they ran out of gas right here. Right there. We've already noted that. And if we do get that run, it's all about 927. And I'm not so sure we could even come that close to that, but that's going to be it. It would take a daily close above 927 to negate this. $30 minutes still in a buy mode. Look here, as far as momentum. Support level coming right across. You can see that at 855. 855 here. There we go. And let's go move into the cash dollar index. Certainly that's been the story of the week. So we talked about the move we saw last week and how this market held up against this 95.65. We've come back, came down here, test that area. Thought we might even, on the second glance, not on the first glance because we had 95.95. On the second glance, we may just test below that and then try and come back. I mean, eventually I think we're going to 95.38 as the first initial key target. But that being said, certainly popped up a little bit off that 95.65 on some short covering. Looking here ahead, it's going to be 95.38 for the key support. Here's that 95.65 for the key daily. Now, I don't necessarily expect this to go on and tick off 38, although once again, momentum has certainly changed for the dollar as bears have been light. We talked about that. They've been lightning positions up for about over 2 weeks, and this last run up in the dollar was led with lighter volume or supportive volume. But we need to keep the focus on this, and as far as where the market potentially can go to, and really, the bearish mode on the short-term basis still suggests this target in place for now on a shorter-term target, which is the 95.13. Something we've been looking at from last week when we thought the market would start to turn post NFP that same trading day. It actually started taking place the day before, shortly right after we got the ADP, which was a strong ADP, which one of the things we had talked about was that here we got a strong number and the dollar was actually going lower on a very, very surprisingly strong number, which was kind of gave you already the thought that this thing's already starting to lose its momentum. Looking for resistance. Well, certainly this 95.95 is key. That might be stretching it a little bit close. Go with 96.08. Here we go. But we don't want to lose perspective because once again, I think the worm has turned for the dollar. I'll go and move this now. Let's not go overboard. So I don't want to flip it outright straight out to bearish, but we'll say range. But the momentum has already started to change. I think we'll be able to go with bearish once. Probably if we finish a little bit lower below. Well, the key things, if we get below 95.65, then we can say, hey, this thing is straight up bearish. Let's go on and go into gold. So we talked about this early in the week, and we had mentioned about this 1293 as well as the 1304. Yesterday it looked like we might have one more punch, especially in light of the dollar weakening. And what I thought coming into this week, I didn't want to write the obituary for gold on a short-term basis yet, because I thought there was still the opportunity. We talked about it actually at the beginning of the show yesterday, pointing out had the weekly had still moved higher and opened the door for us to still challenge. And challenge we did. We went and made another run up here, coming up to about, I think it was like 1294, 95. But the market has turned lower now, because I think it was rather disappointing that we weren't able to add and take out 1300 in light of the dollar breaking down. So it certainly rang some caution signs up there for gold. We actually had 1293, I believe, for our resistance. Yes, we did. Well, things have started to turn around for gold now, so let's... Resistance now would be 1288. Still quite bullish. We'll move this just a step lower in case you want to go and goose those stops a bit. It's actually going to be 1278 for support, 1278. And the momentum had changed here, generating the sell signal at 1289, and we're still pushed low. And you can see here when we try to rally them up here, although the market moved above that, we're still in the sell mode. The faster moving average was not able to go across the slower exponential moving average. So once again, going with momentum, certainly has opened the door for them to still stay lower here. Now we'll go and move into the bonds. Well, I guess we've gotten a bit overdone here with the bonds as equities are starting to slow down a bit. Support's going to come in right there at 45.26. And resistance right here at 46.28. Still remaining bearish. Things have really pared back quite a bit in the buns. We had that 64.10, and that 64.10 certainly did work as almost like a pivot here. Especially on the German data, you would expect a little bit better move here with the buns. Resistance on a short-term basis is going to come in right there after. Wow, what a move! Overall, 63.55 seems like a long way off. We sort of generated this sell signal and it broke down, and even though we rallied back up, as I said, we got just above here, but the sell mode remained, and they've really pressed them for all it's worth here. On a nice little smart rebound, it's going to be, seems like a long way off, but we've come so far so fast. Would be the 63.55. Long ways off, but that's where we're at right now. Which was support yesterday. Boy, they really stretched this thing for all it was worth. That looks like 63.04. Right there, coming across. 63.05. And let's go here with the DAX. Nice recovery here in the DAX. Well, we had 812 as our resistance, and we jumped above that. We've come quite a ways here. There it is at 825. And support's going to come in right there at 691. Well, there's the buys chart for today's trading, and let's go on and pop back into the main area. Euro's still holding up relatively steady. Dollar index hanging around this 95.83. I think things have really started to turn around here with the euro, but we're still open for a little bit of a downside, and they'll see if they can trigger these stops. But once again, with this government shutdown, no economic news, we might be stuck in a little bit of a tight range, but on a short-term basis with the 30-minute exponential moving average, we are in a sell mode, so you have to question the upside moves here. The market may want to feel like it got a little bit overdone, so they may try and test. I'm just not sure if we can make it up. I think that people probably want to gobble this thing up on moves down here to 14.26, thinking, okay, things have now started to turn around for the dollar. But like I said, with light economic data or no economic data for the most part, interesting to see how the market will play out. But then on the short-term momentum mode, we are in a sell mode here with the euro for now. But we'll go on and get this posted into the chat room. And thanks for joining us here on the European Crossover webinar.